Hello everyone, welcome to lecture series number 3. We are continuing with the journal entry number 2. On April 2nd, cash deposited into bank rupees 25,000 by the business or opened a bank account for rupees 25,000. Let me give the explanation of the journal entry in detail. So this is the journal entry. I have debited the bank account debtor 25,000 and I have credited the cash account with the amount of 25,000 followed by the narration being cash deposited into bank. As we are aware that there are two relevant accounts involved in this transaction. When the cash being deposited into a bank, there are two accounts, that is, one is the cash account and another one is bank account. In this case, both the accounts belong to an asset account. Cash comes under asset account, bank also comes under asset account. So in the journal entry, you have credited the cash because the cash is going out of the business and it is being deposited in the bank. So the business finds that there is a decrease in the asset because cash account is an asset account. So when the cash is taken from the business and it is being deposited into the bank, there is a decrease in the cash balance. So there will be a decrease in the asset. So when you find decrease in asset, it should be always credited. That is why the cash account is being credited. And the bank account is being debited. So who is the receiver of the cash from the business? It is the bank that receives cash from the business. So you have to debit the receiver. And not only that, since the bank account is an asset account, since the same cash is going to the respective bank account, that shows an increase in the asset also. So whenever you find increase in the asset, that should be debited. So the cash account decreases because the cash is being deposited, taken by the business, it is being deposited and the cash balance gets reduces. So it is being credited. And the bank account of the business increases as the bank receives it as the deposit. Now let us see the equation, whether it maintains or balances the accounting equation. Yes, it maintains the accounting equation. How? Assets is equal to liabilities plus equity is the accounting equation. Initially, we have no liabilities, or assuming that there are no liabilities involved, and assume that there is no initial investment by the owners. So assets is equal to liabilities plus equity. Now, our assets consisting of in this transaction is cash and bank. So now, if you see, the assets is equal to cash, the cash balance is reducing by 25,000 because the cash is being taken by the business and is being deposited in the bank. So you find cash minus 25,000. Whereas in bank account, you find an addition, the plus symbol, wherein the same cash is being deposited into the bank. So since both cash and bank represent the asset, and there is neither increase nor decrease and the asset remains same because the same cash is being deposited into the bank. So in the asset, there is no change and it remains equal. So if you see, the final equation shows that the total assets on the left side are still equal to the total liabilities and equity on the right side, which means that the accounting equation remains balanced. The deposit of the cash into the bank has resulted in the decrease in the cash account, but an increase in the bank account. But the total assets are still in balance with the total liability. Hope you understood the concept. Thank you for watching.